Money printing usually leads to inflation. Inflation usually leads to higher interest rates. That usually slows economies. So we're probably going to have a serious economic setback in the next year or two.
Hello everyone, I'm Giorgio Tavazza and you're watching Avanguardia Investment Media. Today we are joined by a very special guest, someone who needs no introduction, legendary investor Jim Rogers, who is joining us all the way from Asia. Jim, thanks for being here.
I'm delighted to be here, George. Good morning.
Good morning. So let's jump into it. We are beginning the new year with the most aggressive Federal Reserve in decades, with inflation at 7.1%, a war in Europe, and markets down 20% from all-time high. So given all of this scenario, what is your outlook for the world economy and financial markets for 2023?
Well, George, so everything you just said is correct. But remember, it all started in 2013 when they were the most aggressive money printer in the history of the world. The United States started printing money like it had never been done. Other central banks, Japan, Europe, joined in. So we've had huge amounts of money printing in the past 13 or 14 years. And it may be coming to an end. We have never had such a long economic expansion in U.S. history. Doesn't mean it cannot go on 30 years, 40 years, but it never has. So we're probably coming to the end of an exuberant and artificial period with lots of money printing in the world. Interest rates went lower than they have ever been in the history of the world. That's coming to an end. Money printing usually leads to inflation. Inflation usually leads to higher interest rates. That usually slows economies. So we're probably going to have a serious economic setback in the next year or two.
Now, as you mentioned in many previous interviews, the debt levels in developed economies have skyrocketed in the last decades, which was fine until inflation forced central banks to raise interest rates. So the Fed is now above 4% on its way to 5%. The ECB is now at 2% coming from negative 0.5. But what's the end game? How long can central banks keep rates at this level when debt is so high?
Well, George, this is the highest inflation we've had, certainly in your lifetime and in my lifetime as well. The 70s, we had high inflation. Things were different then. The United States was still a creditor nation. There was the Soviet Union. There was Red China. Lots of things were different last time around. But inflation got so bad that in the United States, interest rates on treasury bills, short-term treasury bills, went to 21%. 21%. You say that they've been aggressive recently. That's nothing compared to what has happened in history. So before we stop this inflation period, somewhere along the line, interest rates are going to have to go very, very high. And the present level of interest rates is not high on a historic basis. It's high over the last 5 years, but over history, it's nothing. So interest rates are going much higher. Economies are going to have serious problems, and we're going to have lots of problems.
Got it. And now talking about the central banks, do you think that the Fed is going to stick to what it's saying that it's going to do? So will they keep interest rates high even in the face of economic uncertainties and financial troubles? Or do you think they will pivot like they did in the past?
To their credit, the head of the central bank in America keeps saying he is going to do it. The last time we had this problem, in 1980, as I said, the central bank did it. They said they were going to do it, and they did it. But very rarely do central banks do what they say because they cannot take the pain. What will happen is, before too much longer, something will happen. I mean, maybe there'll be peace in Ukraine. Something will happen. Inflation will feel better. Then they will start loosening up again to save the economy. And somewhere along the line, they're going to print more money, and we're going to have even higher inflation and higher interest rates before this is over. No, it's going to be very serious before this is over. And they will give up. They always give up, except once or twice. We've had 2 good central bankers in American history, but most of these guys just give up. They're bureaucrats and academics, so they don't know what they're doing.
So if we are imagining a Fed that is going to pivot in the near future and that will bring another spike in inflation, is it safe to say that we are probably going to be bouncing between recessions and inflations? And so it wouldn't be probably the best environment for the stock market and financial assets.
Well, if you get it right, it'll be good for financial assets. I mean, there were people who made money in the 1930s. There were people who made money in the 1970s. You know, if you get it right, yeah, it's not easy, but there will be people who will make money. Hard assets, real assets are usually a better place to be when there's a lot of inflation and a lot of money printing. I mean, silver's down 70% from its all-time high. Sugar's down 70%. So these are not bubble numbers. Some assets are down a lot, and they may do very well once they start printing money again. But you're right. Be careful of financial assets. Bonds are in a bubble, have been in a bubble. Property in many places is a bubble. Some stocks were a bubble. No, you have to be very, very careful of investment assets in the next decade.
So now you mentioned some opportunities in the commodity space and in real assets. Do you see anything else that is undervalued? And where do you think there are going to be opportunities in the next years?
Well, I mean, some things are undervalued. I've put in a little money into Uzbekistan recently. Uzbekistan was an old communist state, you know, that was ruined by the communists. Now they've started to change and it's very cheap, but they're not, I don't know many assets or many economies like that. Most economies have been discovered in the past 10 years, 20 years, and most economies have gotten exploited. I mean, even China, the Chinese stock market, everybody knows about the Chinese stock market. Alibaba, Tencent, you know, we all know these great Chinese companies now. So there are not many undiscovered assets. Agriculture, yes. I mentioned some things in the commodity business that are still very low, but most things have been discovered.
Now, talking about Asia, in your book, Give to My Children, a Father's Lesson for Life and Investing, which, by the way, I loved reading as I am young and I'm trying to minimize my mistakes, even if I know it's not possible to do completely. So in your book, you highlight the importance of seeing the world with a global view. I also know that you're very optimistic about Asia. How do you see the world changing in the next years, and who do you think will be the winners and losers of the next decades?
Well, no country has stayed on top more than 100, 150 years or so. Throughout history, they're always changing. The US has been on top for a long time, but now we're the largest debtor nation in the history of the world. So our day on top is probably coming to an end. The debts keep going higher and higher in the United States. I don't like saying this, George, I'm an American citizen, but I have to face fact. So America's days are probably coming to an end. As I look around the world, it will be Asia in the future and probably China that will replace the US as the top nation. But China won't last forever either. You know, they'll only last 100 years, 150 years. But you know, George, China is the only country in world history that's been on top 3 or 4 times. Rome was great once. Egypt was great once. Britain was great once, but China's been on top 3 or 4 times. It's also collapsed 3 or 4 times, but it is rising to the top again.
Interesting. So would you say that it would probably be important to be able to speak Mandarin and know more about the Chinese culture for the next decades?
Well, I have moved to Asia so that my children will speak Mandarin and know China and know Asia. You can ask me in 80 years whether I did the right thing or not. But so far, yes, that is my view.
Great. Now I want to, as for the final question, I want to tap into your experience. You had an incredible life. You were extremely successful in business and you traveled all over the world. If you could go back in time and talk to your 20-year-old self, what advice would you give him?
Well, as I look back, I've loved my life. I've had a lot of fun. I've made mistakes, but I've had a lot of success and fun. I guess the main thing that I would change if I were you You know, when I finished university, I went to Oxford University in England. I should have gone to Asia. Now, I had a wonderful time at Oxford. I had great success at Oxford, a wonderful time. But if I'd been smart, I would have gone to Asia instead of going to Oxford. So I guess that's what I would have gone to Asia. I would have learned Chinese. I would have spent the next few years in China. I had great success in New York. Don't think me wrong. I had a lot of fun in New York, but still, it would have been, if I'd gone to Asia, I'd be really, really rich now.
Okay, and regarding personal investments and for investors, what do you think are some of the key fundamental traits that will enable an investor to be successful in the next years?
Well, always the main thing that people need to learn is only invest in what you yourself know a lot about. Do not listen to hot tips. Do not listen to the internet, the television. Don't listen to hot tips from anybody. Only invest in what you yourself know a lot about. I told you you could only have 25 investments in your life. You would be very careful about what you invested in, and you would probably be a very successful investor. The mistake that we all make, including me, is we listen to something, we hear something, we get excited, and we invest, and we don't know what we're doing. Then if it goes up, we don't know what to do because we don't know why we bought it. And if it goes down, we don't know what to do because we don't know why we bought it. So if you just stay with what you know, you will be a successful investor.
So, Jim, thank you so much for taking the time to be here today. For me and for the people who will watch this video, it's been an incredible learning opportunity. I know that it doesn't happen every day to be able to listen to somebody with your wisdom and experience. So thank you.
Thank you, George. It's been fun. I hope we can do it again sometime.